Welcome to Deep Dive Cuttlefish. Today we're tackling a really big one, the U.S.-China trade war.
Yeah, it's huge.
We've been looking at a recent video from Nolan Matthias, on his YouTube channel. And, well, he lays out a pretty stark perspective. He's basically arguing the U.S. made some critical errors, like right from the get-go.
That's right.
Mm-hmm.
Matthias paints this picture of the U.S., this seemingly untouchable dominant power almost walking into a trap of its own making, really, by
Right.
starting this trade war with China. He definitely sees it as a fundamental miscalculation.
A miscalculation with potentially huge global consequences, he says.
Exactly.
Okay, so let's unpack this miscalculation idea a bit more. Matthias's main point, his central argument, is that the U.S. was maybe, well, overconfident.
Yeah, perfect.
Thought it could dictate terms, and he uses this analogy. It's quite good, actually, like a dominant player who forces everyone into a game, but then realizes, oops, they don't actually hold the strong hand they thought they did.
It's a strong image.
Yeah.
And his core argument is, well, it's blunt. The U.S. is unlikely to win this trade war.
Right.
He contends that over the last couple of decades, the U.S. basically gave up its leverage, kind of accidentally. And now China's in a more powerful position.
A shift that could genuinely reshape the whole global economic order.
That's his thesis. So our mission today really is to dive into the key steps in his reasoning, see how he builds that argument.
See if it holds water. Okay.
Right.
So, where does Matthias say this all started? This fatal mistake, as he calls it. He goes way back.
He does, all the way back to 2001. China joining the World Trade Organization, the WTO.
Which is interesting because back then that was mostly seen as a positive thing, wasn't it?
Absolutely. But Matthias frames it as a significant error by the U.S. The hope back then, the U.S., was that bringing China into the WTO wouldn't just integrate them economically.
Right. They thought it would also nudge them towards political reform.
Exactly. Make China, in his words, less communist and more democratic. That was the idea.
The whole economic openness leading to political openness theory.
Mm-hmm. But Matthias argues that political transformation, it didn't happen, not in the way the U.S. expected.
And he sees that as a real turning point, a moment where the U.S. misjudged the long-term game, especially for its own economy.
Precisely. He really emphasizes that the U.S. seriously underestimated the economic fallout for itself. The trade relationship that grew out of it wasn't balanced.
Not at all.
And that imbalance, according to Matthias, is right at the heart of the problems we're seeing now.
Okay, so that leads us straight into the China shock, right? Matthias talks about this huge, dramatic increase in U.S. imports from China after they joined the WTO.
Yeah, the numbers are pretty staggering. He points out it went from roughly $100 billion in the early 2000s,
Which is already a lot.
right, to over $500 billion within about 20 years. That's a five-fold increase.
Yeah.
Just massive.
And connecting the dots, this flood of Chinese goods, it was largely because U.S. companies moved manufacturing over there, didn't they? Chasing lower costs.
Exactly. And that created this huge reliance on Chinese goods
Yeah.
across so many sectors here in the U.S.
But here's the kicker. The point Matthias really drives home. It wasn't a two-way street.
No.
China wasn't buying nearly as much from the U.S. So you get this massive trade deficit we always hear about. But maybe even more critical.
Uh-huh.
The U.S. started losing its own capacity, the ability to actually make essential stuff domestically.
That touches on economic security, doesn't it?
Mm-hmm.
Matthias argues that by outsourcing so much manufacturing, the U.S. basically made itself vulnerable.
How so?
Well, think about it. In a conflict, maybe an economic one, maybe something else, if you can't produce essential goods at home, that's a major weakness. He sees this as a key moment where the U.S., probably without realizing it fully, weakened its own position.
And the jobs impact. Can't forget that. Matthias mentions estimates, job losses in U.S. manufacturing.
Yeah, somewhere between 500,000 and maybe up to 2.4 million. The huge range, but undeniably significant. He stresses that, while the overall trade might have seemed good on paper for the whole U.S. economy,
The pain wasn't spread evenly.
not at all. It was concentrated. Certain regions, certain communities got hit really hard.
And he links this to politics, right? The political angle.
He does. He suggests those areas hit hardest by the China shock. Those manufacturing job losses, they were pivotal in the 2016 election.
Driven by the promise of bringing those jobs back.
Exactly. That promise really resonated. But Matthias throws in a dose of realism pretty quickly.
Which is?
Even if manufacturing does come back to the U.S. automation, it means we probably won't see the same number of jobs created.
Right. Manufacturing is just different now. Highly automated.
Totally. So yeah, he suggests maybe you could reshore production over, say, 3 to 5 years. That might be feasible, but the idea of getting back all those traditional factory jobs, probably unrealistic in today's world.
Okay, so let's jump forward. 2018, Trump's trade war begins. Matthias sees this as the first big U.S. attempt to, like, claw back some ground.
Yeah, to reassert itself. But China's reaction was very revealing, wasn't it?
How they retaliated.
Specifically targeting U.S. farmers. That stood out. As Matthias points out, it showed this wasn't just some narrow dispute about, I don't know, steel tariffs.
It had ripple effects.
Big time. Industries that seemed totally unrelated got hit immediately. It really highlighted the potential for widespread collateral damage.
And then we get the more recent stuff, the reintroduction of tariffs. February 2025 starts at 10%, then bang, 20% in March. Officially, the reasons given were things like fentanyl, national security. But Matthias reads it differently.
Yeah, his take is that it's another play by the U.S., trying to reassert dominance on the world stage. But he argues the U.S. underestimated China's resolve.
They didn't back down.
Nope, despite the pressure. And that led to this tit-for-tat cycle, escalating tariffs on both sides.
Until you get to these almost unbelievable numbers by April 2025, like 145% U.S. tariffs on Chinese goods, 125% Chinese tariffs on U.S. goods.
It basically destroyed trade between the two, as Matthias describes it. He uses this phrase, diminishing returns.
What does he mean by that?
Well, initially, the tariff hikes probably hurt China quite a bit. But as they kept piling on, the additional damage got smaller and smaller because trade volumes had already crashed.
Like trying to squeeze water from a stone, yeah.
Exactly. And China's perspective, according to Matthias, shifted. They started thinking, hang on, the U.S. needs us more than we need them now.
Because of all the cheap goods U.S. consumers rely on.
Precisely. That gives China huge leverage. And you see things like the WTO estimating this massive, like up to 80% reduction in U.S.-China trade. Trade itself fragmenting along geopolitical lines. It's serious stuff.
Okay, so let's dig into why. Why does Matthias think China has the upper hand now? He points to weaknesses in the U.S. economy. First one.
The deep reliance of U.S. consumers on cheap stuff, especially from China.
That's a big one. We've gotten used to it over decades, haven't we?
Totally. It shaped spending habits, expectations. So suddenly, slapping on massive tariffs, that disrupts everything. It means higher prices for consumers. Almost inevitably.
Okay, weakness number 2.
The hollowed-out manufacturing base. We talked about this. Even with talk of bringing manufacturing back, Matthias says the capacity just isn't there. Not right now.
It takes time to rebuild.
A lot of time. He estimates at least 3 to 5 years to build the infrastructure, the production lines. Minimum.
And even then, the automation issue means fewer jobs than before.
Right. It's not a simple rewind.
And the third weakness he points to.
Dependence on foreign supply chains. Even for stuff stamped Made in USA.
How does that work?
Well, a lot of those products still rely on components sourced from overseas, and China is often a key part of that chain. So making a clean break is incredibly complicated and economically painful.
It's like this intricate web, isn't it?
Exactly. A final assembly might be here, but a huge chunk of the value chain still depends on international partners. So tariffs mess up the flow, create bottlenecks, drive up costs everywhere.
So bottom line, who gets hurt most in this scenario, according to Matthias?
Primarily, he says, U.S. consumers. Facing higher prices, more inflation. Because of the tariffs themselves, and because alternative sources will likely be more expensive.
He even suggests other countries might just raise their prices too, seeing an opportunity.
Yeah, potentially. And beyond consumers, U.S. small businesses. They often don't have the resources to just absorb higher costs or quickly pivot to new suppliers.
So they struggle to compete, could lead to closures.
That's the risk. And don't forget the farmers. They've already felt the pain of losing access to that huge Chinese market from the retaliatory tariffs. Big impact on the agricultural sector.
And even U.S. manufacturers. It's not easy for them either, is it?
No. The goal might be make it here, but shifting complex supply chains away from China quickly. It's tough, it's expensive. Matthias uses Apple as an example.
What about Apple?
He suggests they're more likely to shift production to places like India or Vietnam rather than bringing it all straight back to the U.S. immediately.
That's interesting. And didn't the U.S. government kind of blink on some tariffs? Electronics, computers?
He points that out, yeah. The partial pullback. Matthias sees that as the government basically admitting how badly those tariffs could jack up prices on everyday things, like iPhones.
He mentioned iPhones potentially tripling in price.
Something like that, yeah.
Yeah.
If the tariffs had stayed fully in place. So that move suggests they realized the direct hit consumers were taking.
Meanwhile, China,
Matthias stresses, has shown they're willing to, quote, fight till the bitter end. They realize the leverage they have now.
Okay, let's flip it. What about China's strengths? Matthias outlines those two. Number one.
They're the world's manufacturing powerhouse. Simple as that.
Yeah.
Dominant in global exports. Huge domestic industrial base.
And a massive population, right? Potential for more internal demand.
Yeah, that helps cushion blows from export markets.
Mm-hmm.
And crucially, Matthias highlights their control over key supply chains, especially for future stuff.
Like what?
Rare earth metals,
Yeah.
electric vehicles, solar panels, things the world needs for the green transition. China's got a big grip there.
And he made that point about cars, didn't he? Like, basically no vehicle on the planet is totally China-free.
Yeah, illustrates how deeply integrated global production lines are with Chinese components. That gives them massive influence.
What about alliances? Matthias sees shifts there, too.
Definitely. He points to renewed talks. South Korea, Japan, China, discussing a free trade agreement again. These are huge Asian economies.
And those talks had been dead for years.
5 years, yeah, dormant. They apparently picked up again after the U.S. started the trade war. There was even some initial chatter, though later softened, about a possible joint response to U.S. tariffs.
That signals some unease, doesn't it, with the U.S. approach?
It certainly suggests they're hedging their bets. Even the official statements from Japan and South Korea talked about being open to more regional trade, maybe signaling uncertainty about the U.S. as a totally reliable partner anymore.
And it's not just Asia.
No. Matthias mentions Canada looking more towards the EU. China's outreach to Africa and smaller nations, which actually started back in 2018.
So the perception is the U.S. is becoming more isolationist, maybe erratic.
That's the contrast he draws.
Yeah.
Compared to China projecting this open-for-business image, it could lead to a real reshuffling of the global economic order.
And China's been actively working on this, right?
Yeah.
Diversifying.
Since 2018, yeah. Very strategically. Recognizing the risk of relying too much on the U.S. market, they've actively broadened their trade relationships.
Do the numbers back that up?
They do. Matthias notes the U.S. share of China's exports dropped quite a bit, from nearly 20% in 2018 down to under 13% by 2023.
But China's overall exports still grew.
Exactly. So while the U.S. bought less from China, China's total exports increased. They became less dependent on the U.S. market specifically.
And other countries picked up the slack.
Interestingly, yeah, places like Canada and Mexico actually increased their imports from China during that period. Suggests the goods just found different routes, different consumers.
So Matthias's point is this global demand for cheaper Chinese goods, it just strengthens China's hand further as the U.S. tries to put up walls.
That's the argument.
Okay, so let's talk decoupling, the impact. For the U.S., Matthias paints a picture of, well, challenges.
Big challenges. Fragile supply chains. That 3 to 5 year timeline, maybe longer, for reshoring manufacturing, and likely with fewer jobs thanks to automation. Plus, this significant hit to consumers from higher prices.
And for China.
More resilient supply chains, he argues. Diversified export markets already in place, and probably a less severe impact on their own consumers.
He also compared the types of goods traded. That was interesting.
Yeah. U.S. exports to China. Mostly industrial stuff. Aircraft, circuits, pharmaceuticals. China's exports to the U.S., mostly consumer goods. Smartphones, laptops, batteries, toys.
Which reinforces his point that tariffs hurt U.S. consumers more directly.
Right, because we buy those finished goods. He also stresses the scale difference. For almost everything China sells to the U.S., they sell way more of it to other countries combined. The U.S., on the other hand, really relies on China for specific consumer items and doesn't have easy alternatives for many of them.
Whereas China can find other suppliers for most U.S. goods, except maybe jet engines or something specific like that.
Potentially, yeah. And that diversification they started back in 2018, it's basically insulated them more from the direct impact of the U.S. trade actions.
So, summing up Matthias's view, winners and losers.
Losers. Primarily U.S. consumers and U.S. businesses. That's pretty clear in his analysis.
Winners.
Potentially China in the long run, along with other nations that can keep trading freely with China. And China's control over those key inputs for green tech, that's significant future leverage.
He's also skeptical about a quick fix through reshoring, isn't he?
Very. Suggests companies might just wait and see. Wait for political winds to change rather than making huge, long-term investments in this uncertain climate. Plus, he notes the U.S. industrial policy seems kind of fragmented.
So the real long-term consequence isn't just economic pain. It's a whole new global trade map.
That's what Matthias believes. The U.S., once the central must-have consumer market, is now seen by some as, well, less reliable, a riskier bet.
And other countries will increasingly look elsewhere, build relationships outside the U.S.-centric model.
That's the prediction. He gives those examples. Canada looking to Europe, Asia, reliable Asian partners rethinking things. China's established ties in Africa.
And his final thought is pretty heavy.
Yeah, quite striking. That the U.S. might be remembered as the last great global superpower because of these trade policy missteps. He also throws in a warning.
About escalation.
Yeah, that if this doesn't get resolved economically, the conflict could spill over. Military, other domains, serious stuff.
But he ends on a slightly hopeful note.
He does, expressing a hope for a return to, constructive free trade between the U.S. and China eventually.
Okay, so bringing it all together, Nolan Matthias offers a really sobering analysis, doesn't he?
Extremely sobering.
Yeah.
He argues the U.S. is unlikely to win this trade war, mainly due to its own past decisions and China successfully leveraging its strengths, manufacturing power, diversified trade.
So for you, our listeners, the key takeaways from Matthias's perspective are pretty significant. The potential for a real reshaping of global trade patterns.
Yeah, and the direct impact on U.S. consumers, potentially higher prices, inflation, and just the long-term geopolitical shifts these economic tensions could create.
It really leaves us with a big question to ponder, doesn't it?
It does.
Mm.
Given how interconnected our global economy is, what does this kind of sustained conflict between major powers really mean for future stability, for shared prosperity?
Yeah, it's definitely something to think about long after this deep dive ends.
For sure.
We genuinely love to hear what you think about Nolan Matthias's analysis. Do you agree? Disagree? Got suggestions for future deep dives, maybe on this topic or other areas of global economics, international relations?
Let us know. Share your thoughts on our Deep Dive Cuttlefish YouTube channel.
Thanks for taking this deep dive with us today.